Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Bill Ferguson. He's the founder of the Facebook group Metro Vancouver Housing Collapse. He's speaking to us from Port Moody, BC. Bill, welcome to HowStreet.com radio.
Well, thank you very much, Jim. It's a pleasure to be with you today.
Bill, can you tell us about the group Metro Vancouver Housing Collapse?
Well, I started the group in November 2017. I got a little fed up with all the nonsense about all this stuff going on, this housing bubble, and all the myths and disinformation happening around it. So I decided to start the group, just to have people engage in discussions where as to what they are seeing and experiencing. It's really taken off. We have over 8,000 members now, 8,100 to be exact. And it's kind of like a Huffington Post type of site. There's lots of news articles posted and people engage in discussions. And, so far I think I've been pretty bang on as far as where all this is headed.
Bill, what kind of a background do you have to get involved in this?
Well, for starters, I was born and raised in the Lower Mainland in 1954 in New Westminster, and my parents are also from this area, so I've always lived here, and I've seen all this kind of thing before. This is nothing new. The only difference this time around is the duration and intensity of this boom, and which I fully believe is going to result in a corresponding correction. Like I said, I've seen this before. As I say on my group, I've seen the same circus before, but with different clowns. This one takes the cake, though. This goes beyond the pale. So, as far as I'm concerned, it's unfolding as I expected it would.
The last time Vancouver had a real estate collapse followed by a severe recession was in 1981 to 82. We want to look at parallels of that market and the market now. How did the run-up in housing prices in the late 70s compare to the run-up we've just experienced?
Yeah. Well, let me go back even further than that. I remember my parents buying a brand new house in Coquitlam in 1966. And by the time the end of 1973 rolled around, it had tripled in value. And then we went into a recession. I remember those years as being very, very difficult. There were the oil shocks in the U.S. The war in the Middle East caused lots of upheaval in the U.S. And we entered a period of stagflation. Inflation was still running high. I remember in 1976, the federal government even brought in the anti-inflation board to try and, monitor things. But I also recall the market peaking probably around 1974. We slid into a recession in 75, and the market kept trending down until about 1978 when it reached the bottom, as far as I can recall. And I believe prices were off about 20 to 25%. And as I say, they might have fallen further if it hadn't been for stagflation. There was the inflation factor built into it. And then it started to trend up slowly after that. And by 1980, there was chatter that the market was kind of reviving. And by 1981, the market peak was, as I recall, in the spring of 1981. And what put the kibosh on that market at that time was when interest rates were raised to all-time highs. I remember walking into the Royal Bank on Columbia Street in New Westminster in the summer of 1981. I think it was August. and the prime rate was 21%. So that's what crashed that market, and in a hurry too. It didn't take long. Prices dropped by about 50% within a year, and people who sold their places, some did that I know of, they sold their homes and sat it out for a year, and they were able to buy double the following year, twice as much house, nicer area, for a lot less. Other people I know moved out of town. They moved up to the interior or else to the far north. A friend of mine actually bought a house in Prince George, and when the recession was well underway by 1982-83, he ended up going into foreclosure. And so that happened as well. There were a lot of people in dire financial straits, and as a matter of fact, I recall that's when food banks first started making an appearance in the Lower Mainland around 1982. There was so much unemployment, and as I keep saying to people in my group, things are different in this time around as far as mega projects goes. In the early 1980s, we had these huge projects underway. Expo 86, Northeast Coal Tumbler Ridge, the Coquihalla Highway, the Alex Fraser Bridge. There were these massive projects anyway, which helped soften the blow to the provincial economy. We don't have anything like that this time around. There's no plan B. And with about 23% to 25% of all jobs in this province related to the real estate industry in one way or another, I think we're going to see a very, very severe correction. As I keep mentioning, it's just a case of the bigger they are, the harder they fall. And there's really nothing to stop this process that's already well underway, as far as I'm concerned.
Mm-hmm. Now, I neglected to ask, how can people join your Facebook group, Metro Vancouver Housing Collapse?
Well, they can go to Facebook and look up my name, Bill Ferguson, or else they can look up the site, I guess, on Google, the name of the group, and it'll take them there. I post it here and there, just to let people know, that there is a group out there, that you're not going crazy. This isn't normal. It never has been normal. And there are people that think this is going to be, a very severe correction, and you have a right to be concerned. All housing bubbles pop. This one is just the longest one we've ever seen, and it's primarily because of the cheapest interest rates we've ever seen in Canadian history, which began. This actual bubble is composed of two parts. The first part is the market started taking off around 2003, and that was around the time that the Bank of Canada, in lockstep with the U.S. Fed, started dropping rates to historical lows to goose the economy, and that was as a result of the NASDAQ collapse. The dot-com bubble burst on Wall Street, and they were afraid that the economy was going to slide into a severe recession because of that, and so rates were dropped, and that's when housing took off in both countries, and not only here, but in other places too. The UK, Ireland, Spain, all those places. And by 2008 or so, the market started to correct here and in all those other places, but we didn't allow that to happen in Canada. We not only dropped rates, but the Bank of Canada not only dropped rates to all-time lows. As I recall, in 2009, at the beginning of 2009, the Bank of Canada rate was 4.5%, and within the space of a year, they had dropped it down to 0.5%. So, that's what goosed the market. And the intent was to create a wealth effect through rising home values so that consumers would go out and spend, and that's what they did. They went on vacations, they bought all kinds of things, everything from motorhomes and trailers and boats and new cars to investment condos and other properties. And instead of using the cheapest interest rates in Canadian history, Canadians decided to pile it on higher and deeper instead. And Mr. Market is not going to be happy with that, and a lot of Vancouver homeowners will be facing a severe financial spanking as far as I'm concerned.
After the run-up in the 70s peaked, what happened after that?
Well, as I said, the market, I'm just going by memory here, the market, you mean in the 1970s or 80s?
Well, of course it must be the 80s if it's after the 70s.
Oh, Well, in the 80s, after the bubble burst in the spring of 1981, it went down. Most properties lost at least 50%. You know, a detached house, which is always the trend-setting market segment, they were down a good 50%. Didn't matter which area you looked at, from Vancouver's west side all the way up to Surrey. And that was the time when the provincial government, under Bill Bennett, brought in what was called the period of restraint. And there were a lot of cutbacks in the civil service, and they were scrambling for money because the tax base, had fallen off a cliff, and the revenues from housing and whatnot. And so the market really affected a lot of things in a lot of ways. People, were unemployment spiked. The economy slid for quite a long time, and housing went down and probably reached the bottom around 1986, 87, and then it started to trend upwards slowly. And I remember also in 1998 we had quite a serious correction. That market took a tumble about that time, about a 20% drop in this area. I remember, for example, a condo complex in Squamish, and it was featured on the news. And they lost about they were selling their units for pennies on the dollar in 1998. So I mean, it goes up and down, isn't it? Nothing goes up in a straight line, and nothing goes down in a straight line either. As far as this so-called recovery that's underway, I don't believe it for a minute. I just think what is happening is people are being drawn in by slightly reduced, slightly reduced levels in the mortgage stress test, slightly lower interest rates, and of course dropping prices across the board from detached homes all the way down to condos. And they're thinking that the recovery is underway, that prices have bottomed. But I keep saying, if this was over, this would rank as the shortest, shallowest, and least painful correction in history. It just doesn't happen that way. So what I think is happening is, unfortunately, some of these people are buying into this idea that this is some sort of recovery, and it's just more of a case of a few extra passengers added to the top deck of a sinking ship, that's all.
Do you think consumers are being misled about house prices going up, and so they're willing to pay more or go out and hunt more with the old, oh my God, if I don't buy it today, it'll be gone tomorrow theory?
Yeah.
Or fear?
There's always, the real estate industry always, inspiring FOMO buying among people is a time-worn element. I mean, they've done that for years. And they try and spook people into buying the latest thing and it also appears to have died down, is the Hong Kongers are coming again because of all the unrest in Hong Kong. Well, we've yet to see that. That has kind of faded away. And now they're on about the increase in sales, which have come off a very weak base. For example, in November, sales in the Greater Vancouver area were up 55%, but they always neglect to mention that they were down 42.5% the year before that. And sales for this December last year were down 46%. So any gains in sales are coming off a very low base, and they're primarily due to dropping prices. So anybody who buys into this myth, I believe it's a myth, that there's a recovery underway, I think we'll have regrets. Just because sales are rising doesn't mean that prices are rising in unison. You can have falling prices in a rising sales environment. They don't have to equate to each other, and that's what I think is going on. I keep telling people if this was, people will know when it's the bottom, when it's the topic of conversation. It's on the nightly news. It's spread out all over all the newspapers. It becomes a topic of conversation among, family and friends and colleagues at work. And when people start hearing stories of huge financial losses among people they know, and that, they're verifiable losses, they can be accounted for, then that's usually the sign that that's the bottom. And we haven't reached that point yet. It's on its way, but we haven't gotten there yet.
We'll have more with Bill Ferguson right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with Bill Ferguson. Bill, how does the run-up in the 70s into the early 80s compare to the market we're seeing right now?
Well, back then, people have to realize we didn't have all this social media that there is now. We didn't have internet and YouTube and Facebook and that kind of thing. So a lot of it was just word of mouth. I mean, people talked about, you know, how much their homes went up in value in the early to mid 70s. And by the time 1978 rolled around, the talk then was about how much money had been lost, how much the market had gone down. And everybody had a story, you know, so-and-so lost this much or so-and-so lost that much. So the story at the time on the run-up was, you know, all about who made what, and everybody was a financial genius, I guess. And then on the way down, at the bottom, around 3 years later, it was the opposite. You know, geez, real estate's toxic, don't get into it, it's a mess, you know. I know so-and-so who lost a fortune. So, you know, you're always going to have people overextending themselves, and you're always going to have the people that think these kinds of things go on forever, and they never do. I mean, all housing bubbles pop eventually. They have them baked into them from the beginning. It's just the way the market works. So we didn't hear a lot of stories about foreign buyers then. That was not something that was discussed. It was really, you know, a non-story. We didn't hear all these stories about money laundering. That was just not on the radar. What else? It was just a normal, you know, this has always been an up and down market. It's just, that was the way it was viewed at the time. And nobody tried to assign any kind of blame, you know, that it was all due to foreigners and all this other stuff. And I keep saying, you know, Canadians are perfectly capable of blowing their own bubbles. They don't need foreigners to show them how it's done. And given the cheapest interest rates for as long as we have seen, that's exactly what happened. So anyway, it was similar chatter, but not with those same elements at the time. It was more about the local economy and how that was, and how money was tight and hard to get, and jobs were, you know, scarce. They weren't plentiful at the time. I remember mortgage rates, as far as that goes, when my parents bought their house in Coquitlam in 1966, my mother was tickled to death that she got the fantastically low rate of 6.25%. And that was for a 25-year fixed rate. And I can remember signing the papers in the construction trailer when they bought that brand new house. And I remember the man, the spokesperson for the company saying, "Well, there you go, Mrs. Ferguson. In 25 years, in 1991, this house will be yours free and clear." So it was a different time, and that was, as I say, considered a good rate. And then when inflation started running high in the early 1980s, it was running around 13% a year. And that's why the U.S. Fed, under Chairman Volcker, raised interest rates in the U.S. to sky-high levels to choke it off. And we look back now and, you know, they say, well, he almost brought the U.S. economy to the brink. And as, you know, they decided to raise their rates, we did the same. And this is what happened. This is why the market crashed so quickly in 1981 after reaching an all-time peak. I mean, we've never seen a high like that before. That was unprecedented. the boom and bust of 1981, 82, and beyond was we'd never seen anything like that before. That was beyond the pale.
Was the real estate industry narrative then the same as the market is now?
Oh, sure. Oh, yeah. Well, we're running out of land. Everybody wants to live here. There's no place like Vancouver. Yeah, it's always been that way. But to a lesser extent, we had less population then. But it's always been the same. It's always been a boom and bust town. And, this is why, another reason why I've decided to start that Facebook group is because I have a different perspective. I was born and raised here along with my entire family, and I've seen all this before. And I'm not going to have somebody, moving here from Winnipeg or someplace and who's only lived here for maybe 10 years and think that this is normal, because it's not. I've seen the highs and I've seen the lows, and I've experienced it, and so has my entire family and my good friends over the years. So we've seen it all before. This is nothing new. It's just a matter of time before we reach the proverbial bottom, that's all.
Was the media coverage narrative the same as the market we're in now?
Well, they have more influence, it seems. I think back in those days, the newspapers were a little less biased. They seem to be very biased these days because, they have a lot of advertising revenues coming in from the real estate industry. There's there's gobs and gobs of money at stake. There's a lot of people heavily invested in this market still. And the last thing they want to see is, a massive correction, which, as I say, is already well underway. November marked the 9th consecutive month of house price declines on a year-over-year basis in the Greater Vancouver area. And the latest news is that people, when they open their January assessments, can expect to see, a reduction of 10 to 15% in their property assessments. So, all the signs are pointing down. It's not, there's information out there. You can find it, but you have to look for it, because it's obscured. A lot of it is obscured. The mainstream media, doesn't play it up very much. They will take a news release or whatever from a real estate agency like Royal LePage and reprint it almost verbatim, and that's supposed to pass as unbiased news. And it's not the way. You got to look at the source.
Was the psychology of the buyers and sellers the same back then as it is now?
It sort of is and it sort of isn't. Back then, people didn't look at housing, I don't believe. They didn't look at housing as some kind of get-rich-quick scheme. A house was more or less a place to live and, raise your family. And, you heard people talk about, buying an investment property and fixing it up now and again, and then, holding on to it and renting it out and maybe selling it down the road. But by and large, they weren't fixated on the market the way they have been in this last number of years as a way of making money. It was a different mindset back then. People didn't look at housing as a way to get rich. It was a place to live. It was a place to hang your hat.
We'll have more with Bill Ferguson right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bill Ferguson. Bill, is it a coincidence that the Prime Minister's name back when the first bubble and burst happened in Vancouver was Trudeau, and we have a Trudeau as Prime Minister now?
Well, I don't know if that makes much difference, actually. The first bubble that, are you talking about the 1981 bubble burst?
Yes.
Yeah. Well, it would have to be, I guess. Well, no, he got in 1968, so he was present also during the 70s boom and bust. The 81 bubble, that had to do more, it was more out of his hands, I suppose. I mean, as I say, inflation was running at an all-time high. You know, you went to the bank and you saw your savings account, like, wow, gee, look at the money I made. I didn't even do anything. I mean, the interest was accrued and compounded. It was just quite remarkable. So, I don't know. For in large part, the present Trudeau administration inherited this mess. I mean, when they were elected in October 2015, this bubble had been going on for years, and they slowly, brought in some measures to try and cool it, along with later on our provincial governments. But I don't think that they're by any means responsible for this. But what would upset me is if they try and tinker with things like the mortgage stress test. I don't think that's necessary. Let the chips fall where they may. I mean, I think over the years, there's been far too much intervention on all levels of government. When Christy Clark came out with that condo scheme, or whatever it was, $37,500 first-time buyers plan about 2 years ago, that's what goosed the condo market in Vancouver. People started second-guessing each other and rushing out. Well, if I buy one, I'm sure so-and-so will buy one, and, prices are just going to go up. So they just need to stay out of it. The CMHC had a huge role to play in this mess. The Bank of Canada, of course. At one time, the federal government, under Stephen Harper and Finance Minister Flaherty, in 2008, they allowed 0% down payments and 40-year mortgage amortizations. I mean, there's been a lot of behind-the-scenes manipulation going on to try and keep this party going. And, enough is enough. Now that rates are down where they are now, there's very little wiggle room for them to drop them much further. They don't have the same bullets in there, they don't have the same amount of arrows in their quiver to fight a downturn like they did in the past, in 2008, 2009. It's impossible. So I think the President Trudeau administration is just going to have to ride this down as it was meant to be in the first place.
According to the Bank of Canada rate of inflation, if in 1979 you had $100, it would be worth about $333 this year. The price of inflation in the real estate market has been exponentially higher. Is this an indicator of how far house prices could collapse?
Well, as I say, inflation was running high in the 70s and early 80s, and they had to jack up rates to cool that off. But the expectation is that all housing bubbles pop, and that eventually all prices return to the long-term mean, or the long-term average. It's just a matter of time before that happens. We're a good 2 years into this correction already, and a general rule of thumb is that a correction takes about half the time to complete as the run-up that preceded it. So I would give this another 2.5 years or 2 years to reach bottom. In the meantime, there's going to be people going down kicking and screaming, as they still are, in denial. They refuse to accept the fact that this market is correcting, and they keep trying to pump it, and they're commenting all the time, but they're easily countered because you have to face facts at one time or another. But as far as the actual intensity of the correction, I do believe it will be in proportion to the run-up. In other words, very severe. I mean, the market can swing both ways, and it often does. And with these price declines that we've seen already, we haven't even seen a full-blown recession yet. And nobody can tell me there isn't one on the way. I mean, all the signs in this country are pointing to that. Maybe not in the U.S., but we're on a different cycle anyway because of what we've done to this economy versus what they did to theirs for the past 10 years with respect to housing, at any rate. So, this is already going on, and we haven't even seen the full effects of a full-blown recession yet, and job spikes. And as I say, there's not a lot to fall back on as far as that is concerned, like we had in the early 80s with all those mega projects that were underway at the time. And they were well in place at that time, too.
Did people from mainland China start buying Vancouver real estate following Expo 86 when the slogan was, "We invite the world"?
I don't believe that for a minute. I don't believe that for 1 second. It's possible that 22 million people, mostly locals and Canadians, I'm sure, who visited the World's Fair, told their family and friends in China, Vancouver's a nice place to live. But I'll bet you most mainland Chinese never stepped foot in this city in 1986, never saw it firsthand. I like to point out, that what amounts to two perpetual World's Fairs, in the case of the Disney parks in both Orlando, Florida, and Anaheim, California. I mean, they've been around forever, and they never did anything. Those perpetual World's Fairs, they never did anything to stop the boom or the bust from happening back in the U.S. Housing collapse 10 years ago. So why would anybody here have this illusion that, a World's Fair that happened that long ago had such an effect? It's ridiculous. And it's the same with the Olympics. I mean, how many people do you know packed their bags and moved on to Salt Lake City because Salt Lake City had the Olympics a few years back? I mean, it's ridiculous. It doesn't make any sense. I do believe the foreign buyers showed up here rather late to the party. If you looked at the what there was available in the way of news regarding foreign buyers in the local press prior to 2008, they didn't make much of a mention. It was only around 2015, 2016 that they really started to rate a mention, and it was, in my opinion, only because we had the party well underway, and that's what drew them in here. If there had been a real estate bubble going on in Timbuktu, that's where the foreign money would have gone. I mean, they have no allegiance to this city, and they're just going to where they think they can make some money. So all the data shows that at the 2016 peak, in the spring of 2016, before we had that blow-off top, that foreign buyers accounted for about 15% and then fell off a cliff after that. And some people point to the foreign buyers tax as being a reason for that, but I don't think that's the case. I think that tax was only brought in as optics in the first place under Christy Clark to look like she was championing the cause of affordability among locals. It was a political move, and it was designed for the upcoming election. But no, the foreign buyers left because the party was over. They sensed that it was topped out, and they moved on to the next party, wherever that would have been. So it doesn't, and people say, well, why did this happen in Vancouver, and why is it happening in Toronto? And I say, well, you know what? Housing bubbles don't happen just anywhere. I mean, why Dublin and not Warsaw? Why Dallas? Why Phoenix and Miami and not Dallas or Des Moines? And for that matter, why some cryptocurrency like Bitcoin and not some other cryptocurrency? Some things just are. But one thing all housing bubbles have in common, a common feature everywhere, is that they all pop. And I think this one is set to pop spectacularly. It's going to be quite a shock to a lot of people.
Did those foreign buyers back in 2015 buy in specific areas of Vancouver?
Well, the stories that made the rounds, and we'll probably never know for sure. It's just like all this money laundering stuff going on. I mean, we'll probably never know for sure exactly what happened, but it's safe to say that they were quite active on Vancouver's west side and in the higher priced markets of West Vancouver, which are now taking a huge tumble. And again, all real estate corrections start at the top. They don't ever start at the bottom and work their way up. They start at the top and work their way down. So there's no question they were a presence here, but they weren't the main drivers of this bubble. This was locals gorging on a smorgasbord of the cheapest interest rates in Canadian history. And people say, well, how can an average person afford to buy a West Side house? Well, you know what? I mean, people watch these TV shows like Flip This House and whatnot, and they get ideas in their heads, and they team up with their friends and family, and they pool their financial resources, and they buy a place, and they fix it up, and then they flip it. But flipping activity is way down. I mean, that's a dinosaur now. It's just like land assemblies. I mean, those are long gone. So these foreign buyers, they were here, but again, it was cheap interest rates that allowed Canadians to even try and compete with that money while it was here. But guess who now is saddled with all the debt and the overhang? Is those Canadians that used the cheapest interest rates in history to buy into the myth of the Asian invasion, and now they're left holding the bag. Because they, as I say, they left long ago. They moved on to greener pastures.
What are the components that have led to this current real estate bubble in the lower mainland?
What are the components? Well, again, cheap interest rates. That's what started it initially. Later on, foreign buyers, all the hysteria about, prices only go up. Vancouver special, it's different this time, which is what they say in every bubble city on the planet. I mean, that's always what they say. It just became, it took on a life of its own. And, this is nothing new, as I say. I mean, prices here go through big swings, up and down. And when they're on the upswing, everybody thinks that they're going to go up forever. And what's different this time, though, is we've never seen interest rates for so low and for so long. And again, rather than paying down their debts, Canadians and locals chose to pile it on instead, higher and deeper. I mean, per capita debt loads in the Greater Vancouver area, they're off the charts. We've never seen them this high before. I think there's $1.75 owing for every dollar earned. So, and a lot of that's tied to real estate. And people, buying investment condos and other properties, by taking out a HELOC against their primary residence, they're going to be in for a bit of a shock. As I say, prices in that segment, the condo segment, are already falling, and people who might be cash flow negative because prices aren't going up anymore, and they only bought them with the expectation of price appreciation. Those people can be blown out of the water in any case by the big developers who want to move their product. They can offer steep price discounts and incentives, and Joe and Jane with their HELOC investment condo, they don't stand a chance. They're in for a very, very, very big surprise. And I've also heard, anecdotally, of people I know secondhand that have already suffered quite substantial losses on investment condos. So what's different this time is, the cheapest interest rates held too low for too long, and other policy measures that were designed to goose this market to create a wealth effect post GFC.
10 years ago, the housing bubble in Ireland burst. Are there similarities between Ireland's real estate bubble and Vancouver's today?
Well, that's an interesting question. I got on a plane and I flew to Ireland. My grandmother was from Belfast, and I thought I'd like to go over there and have a visit. So I got on a plane and went to I landed in Dublin in February 2018, and I made a point of finding out, from the locals, what they experienced with the housing bubble over there. And I'm telling you, it was a nightmare. It was a nightmare. I mean, during the early 2000s, they were fed a steady diet of the Celtic tiger. Oh, Ireland, everybody wants to live in Ireland, the economy's booming. And being part of the EU, they had a lot of migration from the continent, people looking for jobs and settling in Ireland for a short term at any rate. And property prices rose. And I talked to this one couple, older couple. They lived in an area outside of Dublin called Rathfarnham. And they said, people just lost their minds. I mean, you better get in now. You'll never get a chance. And prices are only going to go up. And it was the same hysteria. Exactly the same. And then when the market collapsed, I remember they also told me over there that Dublin Airport had hundreds and hundreds and hundreds of cars left at the airport with the keys still in the ignitions, and people had just left. They said, they just walked away from everything. They either emigrated to Canada, Australia, New Zealand, or wherever, or they went back to their home countries. And another thing, too, regarding foreign buyers, never once did I hear anybody in Ireland say, or the Americans, for that matter, because I spent a lot of time traveling through the U.S. during their housing bubble. Neither of those places ever pointed at foreign buyers as being, the reason for what they experienced, for the high prices. Never came up. So, if the Irish wanted to, they could make a case, I suppose. They could say, well, all those migrants from the EU coming in, blah, blah, blah. But no, it just didn't. They never looked at foreign buyers as having that kind of impact ever. But they took, when I was there in 2018, the Irish economy was the effects of the housing collapse were still resonating through the economy. People were still in debt up to their eyeballs. Foreclosures were still underway. Huge areas, big subdivisions, empty, boarded up. It was a mess. And apparently they've gone through a mini bubble number 2, just like the U.S. has done recently, and they're correcting again. So I guess some people never learn. As I like to say, you got 3 kinds of people out there: the ones who make it happen, the ones who watch it happen, and the ones who say, what happened? Well, I think there's going to be a lot of people here that say, what happened? Like, how did this happen? But further to that, they don't know how we got here in the first place. They just think it's always been this way. And that's why I started my site, because it's not always been this way. And this is just a real head fake. You're in for a big surprise.
In the late 80s, Japan bought up the world. The real estate bubble burst. They sold and went home. This time, China's been buying up real estate around the world. Could we see China sell off their properties to pay off their bills at home and then go home themselves?
Oh, I think that's been underway for quite some time. Oh, sure. The Chinese, by all measures, in most markets, from Los Angeles to Vancouver to, European markets, they pulled out a long time ago. The Chinese economy, they've gone through a massive housing bubble over there too. Not only that, all the ghost cities, standing empty. So, no, the Chinese economy, by all accounts, is correcting and in for quite a downturn. And as far as the Japanese go, they weren't much of a presence here, as far as I recall, ever in the housing market. I know that their financial tentacles spread out throughout the world. It wasn't. I remember when Sony bought Universal Studios, and that caused a hullabaloo. And the car industry and whatnot taking over here and there. But the Japanese were never a major presence in this market. And Japan is a different market anyway. It's quite different. A very low birth rate, practically zero immigration, an aging population. So they certainly wouldn't account for much. But as for the Chinese, they're trying to create a solid middle class. And I've been all through Asia, and you see tour groups full of Chinese people from the mainland, and they've got money in their pockets now that they never used to have. And they were out there, they were active, but, they look for value. They'll go, if they do have the money to invest, they'll go to a place where they think they can make some gains. They're certainly not going to invest in a collapsing market like Vancouver. I don't think many of them are quite that ignorant about what's going on here.
Do you have predictions on how much real estate prices in the lower mainland of BC could drop for condos, detached, and high-end homes?
Well, the high-end, I remember Mark Cahotis, the Wall Street specialist. He predicted 60 to 80% in the high-end. And, it's possible, West Vancouver, the west side. Historically, in Vancouver, from as far back as I can recall, the market always takes off first on Vancouver's west side, and then it ripples out to the rest of the province. That's just the way it works. It has to start somewhere. So it starts on the west side, and then it spreads to the suburbs, and then it spreads to the interior, and then Vancouver Island, and where prices get bumped up. And then when the correction starts, it also happens on Vancouver's west side, or in the higher end areas of West Vancouver. I remember a year ago, Alan Mark Angel, who was a North Shore realtor, he was on a podcast I listened to, and he's worked on the North Shore for 40 years. And back then, a year ago, he said he'd never seen the market so bad as far as sales and price drops. And that was a year ago. So As I say, it's just a matter of time. This correction will start on Vancouver's west side or the high end and ripple outward just as the boom started on the high side of the market.
I believe that podcast was right here on HowStreet.com radio.
Oh, there you go. That's probably where I heard it. Sure.
Is a real estate crash and bottom likely to happen in 2020?
I don't think 2020. No, I think it will continue to decline. For example, December sales at the moment, and I'm talking confirmed sales from December 1st to up to now, what's today, the 19th. They're running low. They're running low. And as usual, the mix is the most of the sales for now are condos, followed by single detached, and then townhouses. And as I say, the detached market is always the one to watch. They always set the price trends. Those are the most coveted, sectors of the market. So as that market goes, the others eventually follow. And there's going to be a lot of oversupply with condos and stuff. No, it won't happen this year. We still have to work through foreclosures. We still aren't in the throes of a major recession yet. So I would give this market another 2 years for sure to reach the true bottom.
Bill, can you tell us again how people can join Metro Vancouver Housing Collapse on Facebook?
Well, they can Google the name Metro Vancouver Housing Collapse, or they can go to Facebook, and I'm sure they'll find it there, or Google my name on Facebook and join in, find out what's going on, because we have a lot of information flowing. We have a lot of people with inside information, a lot of people connected to the real estate industry, both realtors, mortgage brokers, people in the banking industry. We have CEOs of companies. I mean, we're talking a lot of people with a lot of knowledge about what's going on as far as those things are concerned. And of course, average people who are, wanting to get into the market, or people who bought some time ago and are kind of reluctant to see any loss of equity. That's one thing about a market. I mean, it's an elevator up and an escalator down, as they say. Prices are usually sticky on the downside. People are loath to give up what they perceive to be their rightful equity gains. But eventually those people will, if they have to sell, will reduce their prices to realistic levels and to try to move them. Again, it's always the have to sell people that set market trends. I mean, not everybody has to buy. Nobody has to buy, as a matter of fact, but some people always have to sell. And those people, when they sell at reduced prices, they then set a new trend for that area, for, new comps for that particular area or neighborhood, and others sit up and take notice. And becomes a self-fulfilling prophecy. Joe says to himself, if the price has already gone down 10%, maybe it'll go down 20 by this time next year. And so people tend to sit on the sidelines and wait for further drops. And then the cycle continues down. Just as it worked its way up that way, with BOMO and whatnot, it can work the opposite way on the way down. So I would say, given the fact that we haven't seen a full-blown recession, money's still cheap, and what else was I going to say? It's on its way, but it'll take a bit more time. Oh yeah, foreclosures. That was it.
Bill, thank you so much for being on the show.
Well, thank you very much for having me. I appreciate it. Thanks so much for your time.
My guest has been Bill Ferguson, founder of the Facebook group Metro Vancouver Housing Collapse. He was speaking to us from the Vancouver suburb of Port Moody, British Columbia. If you have any questions for Bill or any of our guests, you can send them to info@howstreet.com. Find us on YouTube at Talk Digital Network, or also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.